Tuesday, September 2nd. Market analysis, Stan Ehrlich. Boy, what a day. Looks like I'm getting what I was forecasting for the last, few weeks. And we made new highs by a little bit, new highs by a little bit. And July and then August came and went. And finally, we're seeing a very sharp break today. And in one case, we made minor new lows for like 20 days, which is a whole month. Not just lower than August 20-ish, sometimes it's a day earlier or later, but around August 20. The spider didn't do that, or the MES, I'm sorry, the daily data on the MES didn't quite do it. It hit support, which I talked about, that being support, bounced off of it pretty good. Now, because it's a 23 out of 24-hour market, futures contract, it didn't have a gap. So yesterday afternoon, opened, dropped off, zigzagged its way down, chewing into support, and then collapsed a second time, and even a third time into the opening and a little bit after this morning, from 6:30 California time and after. Challenged the lows that were made on August 20, 21, 22. Came very close. Bounced back pretty good. But that's probably because there's a gap to close now on the SPY. It doesn't need to, it should get back up to the low of Friday. But that's about it. Then I expect it to stall out and turn back down and make new lows maybe this week, which is only a 4-day week. It shortened for, a lot of markets. Not everybody was closed yesterday. So I really want to see a close below 632 on the spider, a close below 63.62 on the MES. Here's the 5-minute chart on the spider. Needs to come back up to some resistance around 642.5. Maybe get up a little bit more, 643 and a couple of numbers to touch the low of Friday. Gaps are almost always closed. They tend to be like a black hole in space. They suck the price action back into the gap, whether it's above or below the market. And then the market frequently turns around and does what it was doing in the first place. In this case, going south. So I really want to close below 632 on the spider. Next, the QQQ broke a little bull trend line. Does now look like a potential head and shoulder bottom that's top. That's very small, only 1 month. And the high that was made on Thursday, which I alluded to being a shoulder high, does definitely seem like one. Let's drag the neckline a little bit further to the right, and that's fine. Coming back up to the neckline is going to be cutting it short of closing the gap. So I'm not quite sure how it's going to handle that. It might get up as high as closing the gap, which is way above the neckline, and come right back down again the same day to close below the neckline. That would be rather idealistic. That would be very rare, but idealistic. So let's just pull this over a little bit more. Now, the downside objective is 535. We broke the neckline, but closed back up above it again today. So we need to close below the neckline. When that happens, I think we're going to be closing below that low of a week and a half ago, 558.80. That's going to throw more nitromethane on the fire and probably cause the market to drop off even more. Now, the downside objective on the head and shoulder top formation that we've got in the Qs and the spider are not that big a deal. They're not super bearish, but these formations that are not particularly large sometimes act like the first domino in a series. It keeps knocking off other longer-term, intermediate, and longer-term sell signals and getting worse and more bearish. Every bull market and bear market starts with the last down tick or uptick. But that's pretty difficult to say that that's the tick that's going to stop a 1 or 2 year trend. So I like what I see. Head and shoulder is active. I want to see how it plays out. Closing below today's low is the first step, and that's almost the second step, which is closing below the low on August 20th. Then we're going to be challenging the low that was made on August 1st, which is really the important one because it's got several different lows at the same price or very, very close, going back to early or late June and early July. So that's going to be a new low close below that level for 2 months plus. Downside breakout of some significance. Next chart, 5 minute, almost breaking the lows again on the 20th. Now there's a head and shoulder top in the NASDAQ futures. We broke the neckline. We came back up and closed above it. No gap to close. It's a futures contract that's only closed 1 hour a day. And not close to oversold. I think we're going to, we're doing damage to the formation here. I mean, bearish situation. Increasingly more bearish situation, I think. And I'm looking for lower lows. We got a bearish engulfing on the first shoulder high. Great. Better if you have it on the top of the market on the highest high, the head of the formation. And now this break is looking like the last shoulder high again was August 28th, just last Thursday, as I was alluding to. Next, the 1 minute chart, 5 minute chart, did make a new low by just a few ticks below August 20th, but it's still in the ballpark. Double bottomed out over a little while and shot back up again a bit to resistance, or a little bit higher would be a little bit better. That's all I need to close some gaps. The Dow Jones YM has a new bearish ER sell signal, red, overbought within the last few days, right up against resistance, outside down day, qualifies to turn red. It did. That's it. This is the nail in the coffin as far as I'm concerned. Looking for lower levels, bumped up against resistance and stopped. I like this. This is what I was hoping for, but in other indexes also. And we got the 5 minute chart. Breaking the lows made on the 26th, but it's got a ways to go to break down below the low on the 21st, not the 20th. Remember, the YM is a little bit different animal than the E-mini and the NASDAQ. And there's your 5 minute chart, so we really need to come down a bit more. Oh, I'm sorry, this is the Russell Daily, actually. I just have it squished like crazy. And it bumped against resistance very handily last Thursday. Not quite overbought, but damn close, awful close. And then started to break down today. We need a lot lower in the Russell, which has a variety of support levels on the way down, but I think it started. And here's your 5 minute chart on the Russell. Now, what about the bonds? Remember, zigzag down slowly over time, so we just made a little bit of a new low today, coming off a high just Thursday. There you go. Start stepping down. Step up, new low, up, new low. So maybe up a little. By the end of the week or next week, new lows. Same thing with 10-year notes, got up to resistance. Stopped it today, dropped off quite nicely. New low for the past 3 days. Let's see how it handles the next support level below the market. Next, we got the energies. Crude, heat, unleaded. New high, strength, not overbought. I suppose it could come up to the next resistance area. Mildly friendly at the moment. And finally got up above the high of the bearish engulfing that happened on August 6th, which worked very mildly, not that big a deal. Certainly not that one, which was much, much better. And some of these buy signals have been outstanding lately. Okay, so mildly friendly. We have an outside down day on the natural gas, which, as you know, has been coming down in a head and shoulder top just great. So that tells me it's about to have a test of the lows, probably make a new low below 2.7. I don't know, maybe the next stopping point is 2.5 or something in the next 1-2 weeks. Next, we've got a huge outside up day in the heating oil. So that is supposed to be friendly. Something's not going to be working the same way here for a little while. So I'm looking for a little bit more of a rally, maybe up to resistance areas of 2.46. Yeah, that looks very likely. That's not very far away in the next few days. The real thing is if this support level 2.1 is broken, 2.18 is broken, then you've got this support area that you're going to come down and test. I think that's going to happen sooner or later. But for the moment, we got a short-term bullish engulfing that's pretty big and looks like it's going to follow through a little bit for a few days. But gold, silver, and platinum are all looking about the same, but not what you think. This is a new high with a new high close for a long period of time. But it gapped up. Gaps are always closed. Secondly, it got overbought right around the old highs almost exactly. Let's draw that in real quick. Click on that high, horizontal line, just about like that. Almost exact. I think we're going to come down and close that gap, and then we'll see whether this is a false breakout or a double top. There's chances for that. Exhaustion upside gap, through resistance, got overbought at the high made way back on April 22nd. That's how double tops start. I'm not saying it's a double top yet, but that's how they start. Plainly a new high ground in silver, way up there, no competition for previous resistance levels, new highs totally. This looks just outright bullish, but it got overbought and it left a gap behind. So we're going to come back down, close the gap, and then see what happens next. What about platinum? Oh, the only thing that's lacking is the gap. Overbought, sharp rally, no new highs. Could hit the resistance level and then turn back to support. I don't like buying into anything that's overbought. Next, copper was dragged up with everything else for change and has a minor new high close since the end of the debacle crash, July 31st. So that would be all of August is now a little bit below where it closed. I suppose a rally up to, say, 5.0 wouldn't be out of the question. Next, new low close, soybeans. I still have this long-term bullish picture in mind. Need to get above recent rally highs, 1063, then a very critical 1076, and the last vestige of resistance, 1100. Above 1100, you've got yourself a wide, big, broad bottom formation and a minimum upside objective of 1230. Next, if it works correctly, of course. Bullish bottom, bullish engulfing, came very close to killing it on Friday. Today, Tuesday, Monday was a holiday, we had a little rally off a support line, which is the neckline, on a giant head and shoulder bottom. Double shoulders, always not always, but usually a single head. Sometimes you get a double bottom for a head on a head and shoulder bottom. There's patterns inside of patterns are not all that unusual. Probably happen 30, 40% of the time, maybe 20, but they're not all that rare. This looks like a bullish, the beginning of the next leg up, testing resistance at higher levels, breaking into new high ground. Minimum upside objective, 62, 62-ish. Now I have to say maybe 62.40. Next, soybean meal. Looks bearish. Probably going to bounce off some support, a little lower. Not oversold. Maybe it'll come down a little bit more. Kind of wanting to see a big bullish engulfing here all of a sudden. Not getting it yet. New high close on corn. That's good. Broke a major bear trend line with several points on it over time, several months. Came down, touched the line almost exactly last week. Classic action. And hit the line, bounced off of it, and is now making new highs for the trend. We should be going up to close the gap at 440. Next, soybean meal. Tried to make new lows, didn't do the job, came back fairly well, still closed lower though. I think it's about ready to pop in a new high ground above 535.50. And if that close above 535.50 does happen, which I expect, then we're going to probably move our way up to 555-ish, major resistance. Next, we've got Shell. Resistance area has stopped the rally, and now we're closing underneath it slightly, and we have a new low for a couple of days. Not that big a deal. Whoops, what am I doing here? Probably like that. Dragged it where I didn't want to drag it. Okay, so looks like it's going to start going down. Next, we gapped down. Apple came back up, tried to close the gap, didn't quite do the job. So getting back to Friday's lows would not be a surprise, and then turning right back down. We're in a big, broad area of trading range, support or resistance. Right now, the bottom of which would be support around 220, and the top has already proven to be resistance a couple times recently. And that would be around, 530, yeah, 534. That's more accurate. And 533.60. Looking for lower levels after the little gap is closed. No gap to close. Tesla testing a bull trend line. Looking for lower levels. Line to be broken. Previous lows a couple of weeks ago to be taken out. And the market to keep moving down. We already made a new low for a while in NVIDIA. We have what would be called in either a double or triple top. Triple tops are fairly rare. So I'm going to call this a major resistance level. And I can't help it. It's pretty much a triple top. Yeah. First high was my bearish engulfing ER sell signal, which worked for a day or so. July 31st. This was a bearish engulfing, but not an overbought condition, so it didn't turn red, but everything else was there on Thursday. Down Friday, down today. I think it can go lower, but we just got oversold today. So small gap to close first, a little bit above today's high, getting back to yesterday's low, and then maybe a little bit more, but that could be the stopping point for next turn down to new lows. And we're back to the E-mini. You guys have a great day and profitable trading to you.